Hey, loves. Welcome to another episode of You See the News. I'm your host, Folasade, the accountability accountant, guys. And I'm just so excited to be here because I know you've been seeing the news because I've been seeing the news. And I know you guys have been waiting to hear my opinion about the news. So, on today's episode, guys, we are talking about they were my fave. Todd and Julie Chrisley of Chrisley's Knows Best. I don't know what Chase and Savannah show was um, after that, but we are talking about all things Todd and Julie Chrisley. So if you don't know, Todd and Julie Chrisley has a popular reality TV show. I think it's on USA Network or whatever, but it's been shopped around and basically on almost every platform after original season aired. And so I've been watching, and this is why I feel a little bit feel a little bit bad that I'm even discussing Todd and Julie because I had all hopes and faith in them. But look, don't put too much faith in these reality stars. Okay, so Todd and Julie Christie was indicted, y'all, and I got all my notes. So if you see me looking down, y'all, um, yeah, don't mind. But do me one favor before we just jump right into everything, guys. If you like, you see the news, please like the video and subscribe to the channel because by you guys doing that, then I know that I should take the time out of my busy mom life schedule, right? And create this content for you guys. So if you guys don't tell me, Falasha, I like you see the news, I like your input, then I don't know if I'm wasting my time or not. And I really don't have the time to waste. So by you guys liking the video and subscribing to the channel actually gives me and my team the information that we need to continue on putting out the content that you guys enjoy. Okay? So subscribe and like the video. Alrighty. So Todd and Julie Chrisley, they had a popular reality show called Chrisley's Knows Best, and it was around their family. The mom, Todd's mom, is off the hook. I just like the family, and truth be told, y'all, I like richness. I like to see wealth. I like to see money. And every time I used to watch like Christie's Knows Best, Real Housewives of Atlanta, and all of those shows, for me personally, coming from the hood and not having a pot to piss in, it motivated me, right? So to see Todd and Julie right now going down, and y'all know for tax evasion at debt, y'all know I am cringing. Okay, so let me give you guys some context. Like I said, if you see me reading my notes, look, we got to do our homework before we come up here, okay? So, Todd and Julie Chrisley was indicted on multiple counts. One count of, well, I'm not going to say one count of conspiracy, but multiple counts, okay? One count was conspiracy. The second count was bank fraud. The third count was wire fraud. And then the last count was tax evasion. Now, in normal situations like this, they would normally have a mail fraud, right? That's if they try to get loans through the mail. But since we have all of this technology right now, it's more so just the wire fraud. So the Christies were indicted for conspiracy, bank fraud, wire fraud, and tax evasion. In addition to them being indicted, their accountant, Peter Torrentino, was also indicted on federal tax crimes. So his crimes might be filing a false tax return or, yeah. So they didn't really mention all of his um, counts that he's been indicted on, but they did say he's being indicted on several tax related tax crimes, several tax crimes. Okay. So in 2019, see guys, see this is the thing. We're in 2022 right now. A lot of us did not even know that the Chrisleys was indicted in 2019. Did you? I didn't. And I was watching them during that time, y'all. I did not know that they were indicted. I always just wish the best for folks, okay? So in 2019, Todd and Julie was originally indicted, okay? And they were charged with defrauding community banks, which are small banks, for over $30 million. Yes, you heard me right. They were committing fraud and acquiring different loans and things from small community banks. And so, as of like last week, um, they were found guilty. The Chrisleys was found guilty. All right. And so with that being said, by them being found guilty, their whole lives, I did a video, guys, and you want to go check that out. Young Thug and Gunna and the impact of jail on generational wealth. And can I be honest with you guys? The Chrisleys are going to also experience the same thing because guess what? They're going to be in jail as well. Alrighty, so as you guys can see, I have on my screen the article from the New York Times, and this is a fair use clause, guys. Says Todd and Julie Chrisley, the stars of Chrisley Knows Best, a reality TV star show, right, was indicted and convicted for defrauding banks for over $30 million and avoiding years of tax bills. Okay, and so here's the thing, guys. I don't know about you guys, but I'm starting to feel like a lot of these people online, like big frosters or whatever, but that's between us right now, right? Okay, so Todd and Julie was indicted for over and found guilty for over $30 million. And see, I'm putting my little accountant hat on and I'm kind of connecting the dots, okay? But before I connect the dots, let's go ahead and start reading the rest of their stuff. Okay, so back in 2019, it was allegedly that they were committing tax fraud. However, they were found guilty of tax evasion. So it was actually true that they were committing tax fraud. A lot of people always ask me, what is the difference between tax avoidance and tax evasion? So the Chrisleys actually partook in tax evasion because, as you guys can see, tax evasion is the failure to pay or a deliberate underpayment of taxes. So the Chrisleys ended up falling into the space of tax evasion because they deliberately conspired with their accountant, Peter, to falsify their tax returns. So the moment that you attempt to falsify your tax return or reduce the amount of taxes that you will have to pay illegally by misstating income or overstating expenses, that is considered tax evasion. Now, tax avoiding is perfectly legal, guys. Tax avoidance is basically where you take an action or a step to lessen your tax bill. So let's say, for example, if you decide to hire your child, by you incorporating that tax strategy, you have actually partook in tax avoidance and reduce your tax liability legally by incorporating tax strategies. Okay. The Chrisleys, on the other hand, based on everything that I've read, they redacted, edited, copied and pasted, trimmed and cut and pasted and faxed over, photocopied bank statements, financial statements, and everything possible, guys. So this is why this is a you don't play with taxes and you don't play with federal loans. So this is where this federal case is all coming from. The Chrisleys defrauded the community banks for over $30 million. Then on top of that, they ended up filing for bankruptcy, saying that they couldn't afford to repay the $30 million that they got from the small banks. And guess what? They ended up getting approved for up to $20 million that will be discharged during bankruptcy. So that means the Chrisleys ended up getting $30 million and only had to pay back $10 million and ended up getting $20 million discharged, meaning they're no longer responsible to pay that debt. So I honestly, guys, when I'm thinking about it, I think that's what triggered the tax evasion case. Because first of all, $30 million, then you broke. Okay, and so here's again. Let me just rewind, y'all. Okay. All right. So, okay, the charges stem back, y'all, from 2007 all the way to 2012. And I don't know if you guys know my history. I used to be a real estate agent. And I let go my real estate agent I let go my real estate license in 2008 because during that time the housing market was about to crash. I was about to graduate with my undergrad in accounting. None of my clients was listening. I wanted them to wait. I was telling them a recession was coming. The housing market was going to crash, and none of them wanted to listen. Or a lot of them wanted to get in and do that quick flip and get their $100,000 out. Guess what? All of my clients that ended up buying after I let go my license, they ended up foreclosing on their house. And so the good part about it is I can sleep peacefully at night because I told them don't buy the house. Okay. So what I believe is, and this is just my analysis, okay, that the Chrisleys actually were partaking in that no doc loan and that heavy mortgage boom that we had during the 2000 what 5 2010 9 2009 boom. I think the Chrisleys ended up getting them loans because you didn't have to give them anything for real, and if you did give them anything, you could have given them any type of paperwork. And I'm going to be honest with you, the mortgage brokers guys were encouraging this behavior. This is why I let go my license when I realized that when I would send my clients to a mortgage company, they would try to tell my client to to give them false paperwork and stuff. It turned me off. It turned me off. So that was another reason why I let go of my license, because it wasn't just the individuals like Todd and Julie that was defrauding. It was the mortgage brokers and the higher ups and everybody in between, from the appraiser to the loan officer to the underwriter to everybody. They all had their hands in this mortgage fraud, and I really believe that that's what Julie and Todd and Julie got themselves into, y'all. I think they ended up falsifying a lot of loan paperwork so they could get them loans, and they invested into real estate. And then when their adjustable rate mortgages doubled, right, they could no longer make their mortgage payments or the interest payments because they had adjustable rate mortgages. So back in the day, that's another reason why I let go of my license, guys, because they had those adjustable rate mortgages, meaning if the market shift, you wouldn't have a consistent loan payment. No, if the market shift, your loan payment will adjust according to the market. So if the interest rates went up, right, then that means your mortgage payment went up. And a lot of buyers had balloon payments at the end of their loans, meaning that they had to pay $50,000, $100,000 before they can even walk away at the end of their loan. So, guys, it was just so much going on, and I do believe that's what got Todd and Julie and them Chrisley caught up. And I remember me and my dad was talking because everybody kept asking us like, y'all not gonna do the real estate. And I was like, Dad, I ain't doing it. He was like, Shade, I am not doing it either. I'm staying myself out of that. And it's so interestingly that everybody that did all of those real estate stuff back in the day, I don't see them anymore. I don't even know if they're still in business. I don't hear anybody within that circle that was booming during that time and making millions of dollars. I don't even know where them people are. So did they get caught up? Like, where are they? Right? I don't know. But back to the Chrisleys, guys. And if you like, you see the news, definitely like and subscribe. Like the video and subscribe to the YouTube channel so me and my team can know that you're enjoying the content. And just so you can know, guys, I rambled just a little bit because I want you guys to get my thought process behind it. And I'm analyzing this with you guys during the show. So yeah. All right. So, 2000, from 2007 to 2012, they conspired to defraud banks, providing false information, fabricated bank statements, and fabricated personal financial statements, okay, to receive millions and millions of dollars. And so, remember, guys, the moment that you falsify any information on a federal document, then that is considered, it can be conspiracy, wire fraud, or something. Okay. So this is why you want to make sure you have your finances in place and you guys are not out there trying to flip things illegally like the Chrisleys did or whatever. Allegedly, like the Chrisleys did. Allegedly, like the Chrisleys did, simply because the moment you put some false information down there regarding your loans and bank loans, mortgages, auto loans, it becomes fraud. And if you also falsify your information on your tax return, it becomes tax fraud as well, guys. So, and my fear, I'm going to be very honest with you guys, my fear is that a lot of people are going to be caught up because millions and millions and millions of people were buying and flipping properties. And I don't believe, from what I can see, and how reckless the industry was at that time. I'm telling you, it didn't have any integrity. That's why I had to walk away. I don't believe none of them gave them correct information. I'm going to be honest. All right. So one issue that the Chrisley had, y'all, was that they ended up getting a loan, and they use them for personal. They use them for their personal lifestyle. Okay. They say that the scheme, the bank fraud scheme, ended in 2014. Okay. Which, truth be told, when I look at the dates, that's when the paperwork started to get tightened. That's when you couldn't just be any Joe Flo and try to get a loan. That's when you had to actually provide tax transcripts and things like that. So I think honestly, the Christies may have stopped the scheme in 2014 because they wasn't easily able to continue scheming. You know, the scammer knows when that scam has ended. Okay, they move on, and I think that's exactly what happened. They also use fabricated paperwork to get leases. It was so interesting because while I was reading the Department of Justice commentary, they ended up pulling certain snippets from the Chrisley's interviews, and Todd has said that, oh, I always end up owing the IRS a lot of money and this, and that, basically lying. And if you read the Department of Justice breakdown, they put the excerpt in there. And so, if you didn't know, the Chrisleys didn't file or timely file 2013, 2014, 2015, 2016, or didn't pay the taxes. And so, guys, let's just take this as a learning experience right now. It's a lot of you that have not filed your tax returns for many years, and you think that by you not filing your return, you're doing yourself some good because you're off the IRS radar. That is not true. Okay. Remember that the moment you have a filing requirement, meaning your income is above the standard deduction for that particular year, then you are obligated to file a return. So based on what the Christies was doing, more I guarantee you that they were obligated to file a return. However, they didn't file the returns timely, and they didn't pay the taxes as well. And what made this case even stronger and considered tax evasion was that they actually tried to illegally reduce the amount that they owed. Now, I don't know what they tried to do. Did they um, underreport the income? I don't know if they overstated the contract. I don't know what they did, y'all, but if they release the tax returns, I know I'm going to come and review it. But they haven't timely filed or paid the tax returns for 13, 14, 15, or 16. And truth be told, if they haven't done it those years, they may have not done 17, 18, 19, 20, and 21. And if they did it to get the stimulus payments and things like that, or to try to apply for any COVID relief funding. And see, now this is where they're going to get themselves messed up again. Did the Chrisleys, and put your question, put your answer to this for me down there. Did the Chrisleys file their 2020 and 2021 return so they can now get PPP loans and COVID relief funds and also the stimulus payments? If you think the Chrisleys filed 2020 and 2021 to get the funding, put it in the chat, okay? All right, guys, time. I'm moving kind of slow. Okay, so they did a file. And what was very devastating is that the Chrisleys took steps to obstruct the IRS collection efforts. That's what they say. The Chrisleys took efforts to obstruct the IRS efforts to collect their taxes. So what they did, oh, here we go. They started hiding income. And so here we go again. When the IRS say hiding income, did they actually try to put it in someone else's name? Did they try to not report it? Did they try to loop it into a corporation or LLC? Like, I'm so curious, y'all. Okay. And then they also were lying to third parties. Okay. So this is a lot, y'all. Right. So now, fast forward to 2022. They just finished their 3-week trial where the jury found them guilty of all counts. Okay. Their accountant was also found guilty as well. I'm not sure. Okay, so let me do a breakdown of their spending. So they basically said they obtained that $30 million in personal loans because they submitted false bank statements, false audit reports, and false personal statements. Okay. The Chrisleys spent this money, and this is, I can't believe it, because I honestly, from an accountant, I've always, when I look at people, I wonder how they make their money, especially if it's not easily noticeable, right? And I've always wondered how the Chrisleys make money. Todd will always say real estate, real estate. I'm like, Why can't they never show him going to any of his properties? I know Bravo can be a little shady sometimes and not really showing the real life of the people, but come on now. Well, I said Bravo. Sorry, Bravo, not Bravo. Some of these reality shows. Okay, so the Christie spent money on luxury cars, real estate, designer clothes, and travel. And actually, they used the newer loans that they got to pay off the older loans. And when you use newer funding to pay off old funding, it sounds like a Ponzi scheme. So a Ponzi scheme have to get new investors, new funding to pay the old investors or the old lenders back. And that's exactly what the Christies were doing. Okay. And then last but not least, guys, as I said, they filed for bankruptcy, right? So what constitutes tax evasion? As we kind of discussed a little bit, it's the deliberate prevention of them not trying to pay. So that means you are deliberately trying to evade taxes, and you're not doing it strategically with through tax planning. You're doing it by falsifying paperwork, underreporting income, and everything. So the moment that you guys actually start to do that, it's considered tax evasion, regardless of the amount. Okay. Okay. So tax evasion is the use of illegal methods of concealing income or information from the IRS or other tax authority. Tax evasion can result in fines, penalties, and or prison time. Tax avoidance is the use of legal methods of reducing taxable income or tax owed, claiming allowable tax deductions and tax credits. For example, hiring your child, like I said, in your 401k. The Chrisleys deliberately try to underreport their income, deliberately try to reduce the amount that they were supposed to pay in taxes illegally, guys. The IRS don't mind you tax planning. The IRS don't mind you trying to qualify for every credit if you legally do qualify, but the IRS dislike when individuals know they made $100 million and you only report $50 million. That's tax evasion. Or, okay, you know you made 100 million, but your taxes are 75 million. I mean, your expenses are 75 million, and you know you didn't even incur that $75 million in expenses. So tax evasion can come up in multiple ways. Okay, so we talked about that. So where do I think Chrisley's where they went wrong? I think this goes back to greed. During that time, I recall everybody I knew of. Now, I'm not saying that people were doing fraud. That's not what I'm saying. But what I'm saying is that as a real estate agent, remember I was a real estate agent and I was an insurance broker. So I was also insuring these people's homes and I was also selling them homes. So I saw the industry. And remember my colleagues were mortgage brokers, bankers, everything, okay? So when I think about it, I think what got the Christies caught up is that they were seeing everybody making money and making millions, and we all were tempted at that time. And instead of them taking a high road and doing things right, they fell in the trap as well. Then they ended up getting that first loan for that property, probably buying the property, flipping it, getting $300,000, and then buying a nice car. And then guess what? They elevated their lifestyle. With the elevation of their lifestyle becomes much more demand to keep up with the Joneses or to continue to make that money so they can maintain that lifestyle. And I think that's where the problem begun. That first loan, because of the temptation from society and all of their peers was making money, they did it. Then once you do it one time, you in so deep. The third time, you desperate because you have no choice. And I think from there going forward, it was desperation. So how could you prevent yourself from being in a situation like the Chrisleys? File your tax returns on time. Don't try to evade taxes. Hire a tax professional like myself, enroll agent, someone that is an expert, not like their accountant, that will guide you the right way, that will change your mindset. So a lot of times, a lot of my clients, I have to change their mindset and get them accustomed to paying higher taxes because they're high income earners. And if um, the Christie's accountant didn't have their mindset shifted, it was a tussle every year. No, 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 no. This is what you're supposed to do. I don't want to pay that. I don't because I know what accountants go through. I go through it too. I just have to turn them away. So the accountant should have held their integrity and said, you know what, Chrisley, I'm not doing it. Find somebody else to fall into your schemes. However, This is the tax returns that I filed on your behalf, or I'm going to file on your behalf, or here you go, you can submit it. You owe 2 million, you owe this, and go from there. That's what the accountant should have done. Should have just gave them their tax returns, they legal, the way it was supposed to be done, tax returning, and go from there. I truly believe that instead of, and I did want this actually, instead of Biden saying, okay, well, all right, merchants, report the income of everybody that makes at least $600. I think they should have made bookkeeping a requirement for all self-employed and for all businesses and all individuals that file Schedule C's, partnerships, corporations, or S corp returns. By enforcing bookkeeping, it makes the owner responsible to manage their finances and to know what's going on. And I think by businesses being obligated to do their bookkeeping will prevent these high tax evasion cases, and also will prevent the reduce the small business failure rate as well. Okay. So there's a lot going on with this Todd and Julie Chrisley case. Their sentencing is supposed to be around October. So I'm pretty curious. And I'm also curious to see what the accountant's sentencing is going to be. So once I get it, guys, I'll get you. But this is the thing, guys. They ended up getting $30 million in loans that has actually destroyed their name, their reputation. Whereas though if they would have just stayed focused, more than likely, him and Julie could have made easily $100 million. So would you have rather made $100 million from your sweat, blood, and tears and legally, or made $30 million illegally and possibly be facing jail time like Todd and Julie? Guys, if you enjoyed tonight's episode of You See the News, then definitely like the video and subscribe to our YouTube channel, because I know you've been seeing the news, because I've been seeing the news, and I know you want me to talk about it. So if you want me to talk about it, like and subscribe so I can bring you guys our next episode. I will see you later. Bye.